Price. That's the number one technical indicator.
You do best by investing for the longer term.
If you can't explain what the business is doing, then that is a huge red flag.
Some technological change is going to put you out of business.
It really is a genuinely extraordinary situation.
Hello everyone, I'm your host Ed Gotham and welcome to another episode of Opto Sessions, where we interview the top traders and investors from around the world uncovering their secrets to success. This week I've got Dr. Jeff Ross on the show yet again. Jeff is the founder of Vailshire Capital Management, a successful hedge fund which employs an innovative all-weather full-cycle portfolio strategy for its clients, and it's achieved triple-digit gains over the last year. In this interview, we discuss the macro environment along with the potential implications of a stronger dollar, the reflation to deflation trade, and of course, Bitcoin. Enjoy. Hi, Jeff. Thanks for letting us interview again on the show. It's good to have you back.
Yeah, thanks, Ed. It's great to be back.
How's everything been going so far since we last talked?
It's been good. It's been a tumultuous time, especially, you know that I'm a big fan of Bitcoin. So Bitcoin is tumbled quite hard since we last spoke. So it's been, it makes for a little more interest within my investment world.
Yeah.
I spend a lot of time with my clients, kind of talking people off the ledge and talking about what volatility is and what volatility isn't.
Yeah.
We can get into that later if we want.
But
yeah, so it's been a very interesting, but always a lot of fun.
Yep. And am I right in saying that you've gone full time in hedge fund now? Is that right?
Close. No. So not quite yet. So actually I'm scheduled to retire from medicine at the end of September. So I have about 2.5 months left. Then it'll just be Vailshire at that point. So I'm looking forward to that.
Wow. That's great.
Yeah.
Really pleased to hear about that. This is because of the success of Vailshire over the last year. And
yes, I did not plan on retiring from medicine. Honestly, I didn't think I would until maybe the end of 2030 or so. But Vailshire has been booming. Business has been good. You know, I'm kind of riding the coattails, you could say, of Bitcoin and this whole movement. So it's been a fun ride, and it's been growing like crazy. Lots of new clients, lots of new assets under management. So I'm having a ton of fun. It's great.
Awesome. And it's not only been crypto that's been moving. The whole markets have been pretty crazy. I mean, equity markets for the last 3-4 months or so have been pretty chop city. Hasn't really moved that much. A lot of the major indices. There's been the talk about inflation, which is the last time we talked. Mm-hmm. And then you mentioned, we've touched on stagflation, and this has become back, like the deflationary news people are talking about again. A recent rally in the dollar as well, which has caught a lot of people off guard. Commodities, lots of commodities substantially sort of retraced. Lumber in particular has come back over 50%, I think, from those ridiculous highs it got to. And now bond yields dropping, suggesting maybe that growth is becoming interesting again in comparison to value. But, you know, there's just so much going on, it's hard to keep track. So I wanted to start just, what's your opinion on the macro environment at the moment and outlook for the rest of the year, sort of?
Sure. So it's definitely a loaded question because there's so much going on. But I think you're right. So I think the easy play for the last 9 to 12 months or so was inflation accelerating and everything that means. So the reflation trade basically was on for the last, say, 9 months. And what that means is interest rates are rising. Commodities tend to spike when that happens. And we saw that in everything, right? We saw it in lumber, as you mentioned, copper. Pick your commodity, corn, wheat, anything that's technically a commodity that was rising, and in treasury rates along with it. So prices down, rates up. But what I think has happened then in the last month or so is that the accelerating inflation, while it's still high, the acceleration is slowing. And so I kind of liken that to you're driving a car and you're taking your foot off the pedal. So you're still moving forward, but it's at a slower rate. And when that happens, these things that are sensitive to inflation, especially treasuries, long-term treasuries, they've started coming down. As you said, again, commodities like lumber have come down significantly because they're extremely sensitive to inflation. And so the reflation trade is off for the moment. So how do I see this for the summer? I think we're in a transition zone right now. So basically all of those things that worked really well, I think at best they'll be choppy, and at worst they're going to continue to lose a little bit of value. So if you're betting for rates to rise, I think you're going to be on the losing side of the trade, at least in the short term. Possibly going into the fourth quarter and into the kind of the first half of 2022, we may see a return of that reflation trade. Although I don't think nearly as severely. I think the time to be in that was the last 9 months, and I think we're past that now. So it's choppy. The markets are a little bit turbulent and hard to discern at the moment. But I do think we're on a little bit of a no more reflation trade, but we slightly are going back to a risk on precarious market for now. So I think it's a good environment for growth stocks.
Yep.
Pretty good, but kind of scary, kind of precarious.
Yeah.
Tons of margin out there, tons of debt out there. There are signs that we're nearing a top possibly.
It did look like that, yeah. I mean, technically, it's tried a few times, isn't it? It's been caught in this sort of box, if you like, a lot of agencies. But, I mean, it keeps on getting bought when it goes to those lows as well. So it is hard to understand what the direction is going to be. And it seems like a lot of, even like Bitcoin as well, a lot of them are caught in these sort of boxes. Are we going to see that for a while, do you think? Is that just going to continue the choppy market?
I think choppy for a while. And actually, since you bring up Bitcoin, I actually think Bitcoin is sort of becoming the canary in the coal mine. So it was the first thing to dump, I think mostly related to what happened in China. And we could get into that if we want to, but China basically banning it and kicking Bitcoin out of the country, the miners in particular. And so that was the first to dump, and it dumped hard, right? It dumped over 50%. That's painful when you have big positions in Bitcoin. But I think that it may also be the canary in the coal mine for a return of risk on. And so there's a chance, I think, that we see Bitcoin start to return back and start to approach new all-time highs within the next couple of months. I just want to emphasize, I think what the markets are showing right now is transition phase. And so I just expect choppy sideways price action in a lot of things, from commodities to stocks. People are buying stocks. But it reminds me of the last big dance before the music stops. And so I would not be surprised if we saw a return of volatility very soon. In fact, in my hedge fund, I just started buying like the VXX. So I'm going long volatility. We had that last big spike all the way back in March of 2020 with COVID. And it's been on this slow decline ever since then. And people are very complacent right now. And I think this is when my spidey senses turn on, my antenna go up, and I start getting concerned that things are getting a little too complacent. And it's probably time to start buying insurance on our portfolios.
And because an increase in volatility would suggest potentially a negative effect on equity prices. Is that generally what happens here?
Absolutely. Yeah. That's when we see those kind of scary drawdowns that happen really fast. In equities. So I would not be surprised actually if this summer, if that happened. So the things that have done well, I think, are starting to pull back. The commodities and energy, financials, things like that are pulling back from their all-time highs. Growth is doing well, but it often does really well right before it crashes. So it's possible we're entering a period like that.
No, that's interesting. And how much do you think it's important that, the summer trade, everyone says, the big traders are away from their desks. Does that still have an impact on, the moves won't be as pronounced and stuff? I mean, we're suggesting a return of volatility. I don't know how much that actually impacts this sort of thing nowadays.
Yeah, I think those old adages were more true back in the day, but not as much anymore. I think there's some truth to it, but for the most part, no, every year is a little bit different. I try to trade each summer as a new summer and based on what the underlying conditions are telling me. So I would not be complacent, although this might be the summer to literally sell and go away, because we may see a big drawdown and a return of volatility, but who knows? The future is hard to predict.
It's very, very difficult to predict, isn't it? And how much, the valuations are particularly high at the moment. Are they justified at all, or is it just because there's so much money that has to be deployed somewhere and it's going into equities because bonds are, not that interesting? What's popping them up,
Right. Well, again, this gets back to the big riddle of what do you do in the face of a tidal wave of monetary supply? So there are dollars, all Western countries are flooding the system with fiat, and it has to go somewhere. And so where it usually goes is into assets like equities, real estate. It's, I think all of these are in basically an epic bubble that's being promoted by this massive printing of fiat. I'm concerned with what's going on in the reverse repo markets. That basically what that is signaling to us is that banks have just so much liquidity on their balance sheets, they don't know what to do with it. And they're basically starting to say, you know what? It's looking dicey. We don't have a great investment alternative because, as you said, equities are really expensive. Are you going to put your money in bonds? I mean, seriously, that's return-free risk. Housing is crazy. And here in the States, I don't know what it's like where you're at, but in Colorado here, housing prices are going up
Yeah, we keep on hearing
2
about
to 10% per month.
Yeah.
I mean, it's just insane. And that's not normal.
It's not
right?
sustainable as well.
It's not sustainable. And it's people who have never thought about housing are talking about going into careers again of flipping houses. It's like 2005 all over again.
Where's all the capital come from? I mean, it's got down from the stimulus but I mean, you need a lot of money for buying a house, right?
Right. Well, yeah, absolutely. Well, you need less and less because up until now, it has been that people have more savings than they've ever had because of the stimulus money. People aren't working, so they're bored, so they're putting it to work in speculations. But the concerning thing for me is I think we saw with Wells Fargo yesterday, they officially are closing down their personal line of credit business. They're just shutting it down. And when you see banks start to get really conservative like that, that gets me worried. They're looking a quarter or two into the future and they're saying, I don't like what I see. Time to shore up our defenses and let's wait. And there'll probably be a crash at some point and then we can release our capital at that point and get things much cheaper. So I'm concerned we're going to see a big devaluation in the coming few months.
And do you reckon that will, because surely that's going to affect numerous markets, like,
yes.
Even though it's just a housing market. So there could be a big sell-off at some point. There is a danger because capital could just be withdrawn from the markets because it's too risky to have it in the markets.
Right. And I will say, by the way, I think we're stuck in this perpetual cycle of these booms and bust. And so, like I said, it's been very complacent. And I think it's related to the amount of liquidity that has been pushed into the system. But every once in a while that peaks. And I think we've recently peaked, honestly, that margin levels have gotten so high so quickly that basically the people who know what's going on the inside, they see danger ahead. So they're all pointing, there's red flags starting to pop around everywhere. I think it's just inevitable that we're going to see another bust. And I think that's coming sooner than later. We'll see that because volatility will spike and it's going to show up in the equities markets for sure. As we know, because we've been through these now several times, it goes across the board. So there's really nothing safe other than holding probably cash.
Yeah. And how do you approach something like that? Say you've got a portfolio. You've been suggesting you're buying options for insurance. Is that the logical way to get a relatively good insurance for not too much cost?
Yeah, so there's multiple different ways. I say the easiest way for most just straight up investors, ma and pa investors, is just go to cash. Sit cash. If you're 100% in stocks right now, maybe go down to 50% or something, or reduce your allocation. That's the easiest way for sure. Cash holds up the best. Even in the March 2020 pullback, I went to, in my fund, a lot of cash, but then also U.S. Treasuries and gold. Treasuries and gold also got crushed back then too, so that was pretty painful. And Bitcoin, I was, well, maybe one of these would be a safe haven asset. None of them were. Everybody just wanted cash, and so that's likely that something like that will happen again. So other ways to do it, like I said in my fund, I'm actually long VIX. So long VXX is a symbol you can use. It's an ETF. That's basically a way to hedge your portfolio. I like that a lot because it's very reactive, and it may go up 2 or 3 times within a day or two, depending on how much panic there is in the market. Other ways are just shorting. You can short ETFs, short equities, or buy puts on things as well. So I do all of that within my hedge fund, and it depends on my clients how conservative the portfolios are. But a lot of times we'll just simply move to cash.
Yeah. And do you think VIX is a better instrument to use as a hedge against a downturn rather than the NASDAQ or some index, a future contract on one of those, because individual stocks move differently, or if they're high beta, they might move a lot more than the indice?
Yeah, I think all of them tend to do well. If it's a big enough panic, then everything in unison goes down. I like VIX because a little bit goes a long way. It's kind of like a very powerful seasoning. You just use a little bit of it, and it's so it's so reactive that you get a lot more bang for your buck with VIX. So I enjoy putting that in my portfolio.
And then in terms of the dollar, it's obviously been rising recently. I'm not sure what it's doing today, but it was on some pretty key levels, almost breaking out, potentially up the upside. The next levels are way up from that. Is that going to be sustained? Like some people that I've been talking to are quite smart that thought that the Fed might be using, how they can it's cheap for them to use some talk or rhetoric to prop up something that might, rather than it being having like a inevitable, like really fast decline. Is that potentially what they're doing, or do you see it rolling over again, or is it actually going to go up?
Yeah, it's a good question. So, like I said, I think for the coming couple of months, the biggest concern is a spike in volatility and a market panic. And when that happens, people sell, and what they sell to is into the US dollar. So because of that, I think we may see continued dollar strength that may last for about a quarter or so. So I think choppy until panic, and then the dollar spikes because that's the safe haven asset of choice around the world. And then going into maybe the fourth quarter or Q1 of 2022, then we get the slide again. I think it's inevitable that over time the dollar is just going to decrease in value. That's what it does. The more you print, it has to go mathematically decrease in value. Although it's against a basket of other currencies that are all doing exactly the same thing. So it's hard to pick winners. That's why it just looks like it's moving sideways over the years, even though in real terms it's clearly losing value over the long run.
But I suppose you should see that in other assets, shouldn't you? Like commodities, housing, they should all be maintaining elevated levels if the dollar is actually going
absolutely
down.
Yeah, nominal levels will continue to rise in the face of a falling dollar.
And the bond prices, so you thought that they might continue this decline at the moment in yields, but eventually they'll start going up again.
I think choppy for the summer until, and again, I'm expecting, might be wrong, but I'm expecting a high volatility event with a market drop, meaning equities drop. When that happens, people, the number one asset, they go into the US dollar. Number two is US treasuries, long-term treasuries. So then what that means that the price goes up, yields go down. So we may see more of that. So sideways to down for the next couple of months, I think, while we're in this choppy period. And then I think some confidence returns and inflation tends to accelerate a little bit into the fourth quarter or Q1 of 2022. So those may start to go back up again. Yeah, up in yield, down.
And if they go up too much, because there's a lot of a chatter about whether or not that is actually negative for growth stocks. It seems to be like that does happen short term, but people are saying long term good bond yield just signifies strength in the market. In the economy, which can be good, I suppose, but debt's more expensive.
So I agree with you. I think in the short term, you can see those where a spike in yields will cause growth stocks to get hurt. But in the long run, I agree with you that shows a sign of strength, and growth stocks tend to do well in a strong economy as well. So it's kind of it's hard to use that as a general golden rule of thumb because it can do either. Honestly, it depends what time frame you're talking about.
And obviously, we're coming into earnings season again as well. Last time we talked, you just sort of implying, as far as I remember, that you thought that earnings would start to be not as good as what people were sort of anticipating because they've been so good previously, coming off such low levels. And there was a huge shifts in how the economy was working, people working from home and stuff. So, and now it's sort of becoming stabilizing again. Do you still see the sort of earnings to be pretty bad across the board, or?
I don't know about bad, but I think similar to
declining growth.
Yes. So basically a slowing in growth, and so I think that's going to be taken. When the market, all it's been doing is rising up to this point, it's going to be seen as a disappointment, I think, and so that's why I think we're kind of setting up for a fall. Even though they won't be that bad, honestly, I think they're just going to be less good. That makes sense. And so the market doesn't like less good. It'll make us pay.
But I mean, it's so complex, isn't it? Because inevitably it can't keep on going up in a straight line or whatever.
Right.
It's going to have these periods. So potentially, is that potentially a buying opportunity on weakness for some of the stronger ones?
Possibly, yeah, definitely. So I'm going to take a wait and watch approach and see how bad it gets. Hopefully, I'll be sitting on the sideline or shorting things going into that, and then have some cash to spare wherever the bottom is. I'm trying to decide if this is just going to be kind of a mild correction or if we're going to see just a significant, punch in the face. Some things I look at based, margin and lending and the reverse repo market and banks freezing up. That tells me these are similar signs to what we saw in 2000 and 2008. So, obviously that portends to a huge drawdown in the markets. But with other things that are going on, I'm seeing lots of signs of positivity. If we pull out of COVID, if the services industry does really well, that could kind of act as a counterbalance to the negativity that I'm seeing, and so it may not be that bad. I don't know. I'm waiting and watching. Either way, I'm sort of betting on increased volatility and declining markets in the near term. A buying opportunity at some point. I just don't know when.
Yeah, and I was just thinking in my head, if the dollar is going to go down, maybe people not seeing it because maybe if it's going sideways against other currencies, but actually really it's going down in terms of its actual value to buy assets, which should reflect positively on equity prices. However, does that come through the same way in earnings? And is that a justification potentially for why there's elevated values at the moment?
Yes. So I think because interest rates are just historically low, at millennial low levels, and because there is so much liquidity in the system, it just by natural function has to drive PEs higher and multiples higher in general. And that's just the system we're in. And I think that we're in the end days of the Keynesian economic experiment. I think this credit-based, money printing-based system, it's going to be ugly. It's going to be extremely volatile. But yeah, we're going to see just crazy valuation levels like we've never seen, and then monumental crashes to go along with it. It's going to be a painful decade. I still think that.
Mm-hmm. And I had a question about some stocks are almost you could potentially argue are so powerful in their disruption of something, whatever it is. I mean, you can pick out a few of them. There's some such as Upstart is maybe an example of one where revenues are just growing so quickly, and it seems as though their business is doing very well. But anything can happen. But are these companies, if they do keep on having exceptional earnings reports, even through periods where the market's actually taking a strong correction, are there stocks that buck the trend and have very strong relative strength, and may not go down or hold well, or even go up? Like, does this happen, or if there's a market crash, does everything pull down? And okay, varying relative strength, but
I tend to think because it's such a systemic problem that the risks are also systemic, and that everything gets sucked down in a drawdown, unfortunately. Yeah. But these companies that you're speaking of, so companies that are riding the large secular trends, software as a service, still obviously AI, robotics, Bitcoin in the crypto industry, electric vehicles, those kind of things. These obvious trends that are going to be much higher in 2030 than they are today, they're still going to go down. And when they go down, they tend to go down much harder because their valuations are so high. But then they're the ones that have the V-shaped recoveries. They recover the quickest. So I like to have those kind of on a watch list. And when we see these big pullbacks and when these great names of these, whatever, pick a company that pulls down 50%, I like to, really bet big on it at that point after it's come down.
Got you. Yeah, that's interesting. So, I mean, you touched on a few there. What innovative sectors do you think are going to do well over the next decade? I mean, electric vehicles.
Yep. Kind of what I talked about. So yeah, electric vehicles I think are an easy one. AI companies, software as a service I think is still going to do well as long as the internet is expanding and eating businesses and traditional businesses. That will continue to do well. The Bitcoin.
MedTech.
I'm sorry. MedTech. Yep, I was going to say that. MedTech, biotech will continue. Healthcare. Since I'm a doctor, I have a particular interest in this area. It is the stodgiest of stodgy sectors, and it is so resistant to change, and it is so in need of change. So I think that is finally coming. I think that technological advances are finally advanced enough that we're going to start seeing major changes. And it gets kind of weird how I think about it, but I think that Bitcoin and that whole deflationary system is going to they're going to create a separate parallel healthcare system that I think eventually is going to become the healthcare system. And it's going to be just very different than what we see now, way less middlemen. So the insurers are going to get increasingly irrelevant. All the middlemen, the administrators and things are going to get less relevant. And tech is going to come in and just completely change. And we're going to get off of treating diseases, end-stage diseases, and get more into how do we stay healthy from the beginning, from the get-go, and live longer, healthier lives enabled by tech and enabled with a deflationary currency.
And how does Bitcoin support that sort of technological change?
Yeah, so I think Bitcoin is just the truest, freest market. That I think it's the only free market truly that exists. And so what that does is it drives down costs of everything, and it creates winners and losers very quickly. And so for people who are used, in the U.S., we're used to healthcare costs rising anywhere from 6 to 20% per year. I mean, it's just been crazy. And so that's obviously unsustainable. It's just another unsustainable feature of the system that we're in. And so when we move to a deflationary system, what that's going to do is drive down healthcare costs. So right now you go in and get an MRI on your knee or something, maybe that costs $2,500. That's unaffordable for almost everybody. You have to have insurance to be able to cover that, or you just choose to not pay your bill and deal with the consequences. But when you're in a deflationary system where the technology is advancing exponentially, from year over year, you're going to see the price of an MRI go from $2,500 to $2,200 to $2,000 to $1,500. And healthcare is going to suddenly be much more accessible to all. Yeah. And the best physicians and healthcare providers in the system are going to be elevated because they're going to provide, like any great product, they're going to provide great service at a great price, and people are going to flock to them. And so it's just what the free market does. And Bitcoin offers a free market solution to whatever it touches, whether healthcare or energy or whatever.
We hope you're enjoying the episode. For interviews like this every Thursday, subscribe wherever you get your podcasts. And while you're there, make sure you give us a star rating and leave guest suggestions along with any other feedback in the review section. Now, back to the show.
So that's a good time to take it back to Bitcoin. So obviously, as you discussed, there's been a big retracement since the all-time highs earlier in the year. And now it's been tracking sideways for 3 months or so, maybe 2 months, around that. What are your thoughts at the moment? And what, technically is stuck in that box? What are you looking at? And what do you think is going to happen over the next 6 months or so?
Sure. Good question. So I look at, when I think about Bitcoin, I look at multiple factors. I look at what are the technicals doing? So what's the price action? What do the on-chain analytics look like? What's the macro picture? And then what are just the general news events? And so from a technical standpoint, it has been awful. Everybody who looks at a chart can say it looks awful. And what we see a lot of TA people post, Peter Schiff and I'm friends with a guy named Peter Brandt, who's a famous trader. Yep. We just had coffee last week, and he's still bearish. He looks at the chart of 2021 and he sees a big head and shoulders and he thinks it could go down. Peter Schiff is saying it could go down to zero, of course. Yeah. And so, I just think it's all nonsense. And that's because the network is still growing exponentially. So the intrinsic value of Bitcoin, the network, is continuing to do this, even though the price is doing this. And so there's this wide divergence between Bitcoin, the network value, and Bitcoin, the price. And at some point, I think the price catches up and then actually goes beyond that. So yes, the technicals have been extremely bearish, but I think we've been forming a bottom. I think we actually did probably bottom. I think it was on June 22nd. And I remember it because the price quickly dipped down below 29,000. In my hedge fund, I made a huge purchase right then because I think this is it. And I was really freaking out. And sorry if this is too much for a podcast, but my sphincter was tight, as I said on Twitter. Like that, it felt really bad to do that. And usually when it feels scary and really bad, those end up being my best trades because I'm like, everyone's capitulating. I'm buying. There's blood in the streets. Be greedy when others are fearful. This is the moment. And so that's what I did. And based on what I'm seeing us form a big, wide, curved bottom that's basically 2 months long that I think extends into July, where we are, kind of mid-July. And if that holds, if we start seeing a series of higher lows on the chart, which I think we are, and interestingly, I don't know if you're familiar with the Wyckoff accumulation pattern. It's this. Oh
no, sorry, I've been seeing you mention that. Yeah,
right. I hadn't really noticed that before or cared about it, but somebody brought that up when Bitcoin was up around 50 and 60. That it looks like a Wyckoff pattern, and I didn't even know what it was honestly. So I started doing research. and then they nailed it and the price went down. Basically what it is it's showing that institutional investors are getting on board in an asset class, and they're trying to shake out the retail traders, the smaller retail traders who get scared out of a short-term trade. And that's exactly what we've been seeing. All of the people who have taken losses in the last 2 months are short-term traders who got in basically from January through April, and they've all got it out at losses. And so they're all mad. They hate Bitcoin. They don't get what it's about. They thought they believed in it, and now they don't, and they're mad.
The institutions were basically trying to push the market down below key technical levels.
Yes.
Drive out the leveraged retail investors.
Right, exactly. And there's some of these people, it's crazy. They're leveraged 100 to 1, it's just insane. So that's all been flushed out. Every time you go below key indicators, the 200-day moving average was breached. Then we had the bear cross, and that's scary. The death cross, excuse me. That's really scary for everybody, and all these different things. But what I've noticed is we have a huge level of buying support right at about 30,000 and just below. There's another resistance band for whatever reason, and John Bollinger of the Bollinger Bands, a guy, he sees this too. But there's a resistance at about 36,000, and then the last line of resistance is that 200-day moving average, which right now is about 44,000, I believe. And so we need to get past those two levels before we can resume the uptrend. And I still hold, I just tweeted it out yesterday and it's gotten a lot of impressions on it, a lot of interest. I think we're in a similar setup to 2013. So 2013, there was this huge bull run up, and then out came the, Mount Gox Silk Road stuff came out, and it crashed the bull market, and everyone said it was over. And it was a horrible spring, summer. And then what it did from, I think, September-ish to December of 2013 is it went up more than 10x in price. And I actually think we're setting up for a similar price. I still hold that by the end of this bull market, it may be extended beyond 2021, but I still think 400,000 to 500,000 per Bitcoin is in play within basically the next 12 months. But we'll see. Yeah.
But it's good that you can see it in other assets over time, that forming a strong base, especially after such a big run up, right? It's still in a long term, you can see that it still looks incredibly good. It's just the short term that isn't good, and you can't just keep on going up in a straight line.
Right.
And it's interesting to see that when the institutions got involved, and then I think Peter Brandt also tweeted, and actually I mentioned it last time that I believe, I know it was on Twitter. I think I commented you that Goldman Sachs trading desk opened up as well. Mm-hmm. So if you can see that they're playing around the market and in a market that has such extreme leverage and no controls as well, like the stock market. The market doesn't shut when it goes down 20-30%. You can see how this sort of thing happens, right? So even in things that have good underlying fundamentals.
Yeah, and that's the beauty of it, right? We're seeing a true free market. We're not talking about it's too big to fail. Should we, inject liquidity into it? Do we protect investors? You eat your own cooking. This is what capitalism really is, and this is what a free market really is. So you take your chances, and you might, if you invest in Doge because Elon is on Saturday Night Live and now you're down 70%, that's how this works, and that's how markets are supposed to work. And what that does is it over time, it gets rid of that speculative froth, because people get wrecked, and people can only get wrecked so many times in life before they start to become more conservative. And so I love it personally. I obviously don't want to see people get wrecked, but I love seeing free markets in action and not have the government swoop in and intervene and turn it into a more socialistic system. But that's just me.
And can you just describe, because a lot of people won't know probably, the on-chain analytics, which are, I believe, supporting this sort of valuation of the network? How does that get a value? What is on-chain analytics, etc.?
Sure. Well, all that means is, what's cool about Bitcoin is it's a completely open source code. So you can see everything that's going on in Bitcoin to some degree. You can't see who is buying, it doesn't say, Jeff just bought, 10 Bitcoin or whatever, 1,000 sats today. You can see, though, the movement and the flows of things, and it's out there for everyone to see. One of the things I like to look at is a thing called Glassnode. They provide some good information. They show on-chain analytics, and they have ratios of things so you can kind of tell what's going on. So you can see where the flows of money are moving into what size wallets So basically, are huge people accumulating, or is it small people accumulating? And what's the growth rate like, and how's that working? So what these things show is that the number of Bitcoin users continues to grow exponentially. So that's a good sign. So they continue to basically double year after year. And if you believe in Metcalfe's law and those kind of things, you believe that the value of the network is growing exponentially to that. So it's continuing to get more and more valuable. It's also showing kind of what I alluded to earlier, is that the people who have been selling have been the short-term holders. So the people who got in at 50, 60,000 back in February, March, April, those months, they're the ones who couldn't take it after just a couple months. They probably had stop losses or something, or they thought, this is not what I signed up for. They sold, and the people who are buying are the bigger whales, they'll call them, people who have large wallets. They're just absorbing all of these people who are selling their Bitcoin for losses. And so I think that means that institutions are kind of slowly accumulating, high net worth individuals. And so that's a good sign, because usually when institutions buy, they buy for longer terms, and they sock it away into cold storage. So what's interesting about Bitcoin is how small the market is. So it's a 700-ish billion dollar asset class by market cap, but almost all of that is locked away for the long term in cold storage, and only a very little bit is available on the market. And so all prices trade on the margin, and Bitcoin is no different, and it's probably the most prominent of any asset class. So just a little bit of purchasing of Bitcoin moves the price dramatically.
Yeah, got you.
So it's ironic, because as M2 money supply, as that liquidity is basically oversaturated because of the quantitative easing that's been going on for the last year and a half or so, Bitcoin has been doing the exact opposite. There's basically a liquidity crunch that's coming up, and that's happening right now. And so when people decide to get positive on it again, that should ramp the price higher and quickly. It'll be extreme upside volatility, I believe, and it's going to be pretty fun to be long at that point.
And regarding China, you touched on it. What do you think? There's any long-term implications of that? I mean, people have been sort of tweeting about how whenever China bans something, that's the time to get in.
Right.
What's your
So Bitcoin is literally antithetical to China. It's antithetical to central control, because Bitcoin just in and of itself, it's a decentralized, secure currency that's of the people, by the people, for the people. And it's exactly opposite of to what China wants to do. They want to consolidate power. They're going to bring out their central bank digital currency very soon. To me, all that is a enhanced surveillance coin. It's, I think, terrible for individual freedoms personally. So I think, of course, they ban Bitcoin, because it's exactly the opposite of what they want to do and where they see themselves going. I think it's a huge mistake, like the banning of the internet and like limiting freedoms. It's always a mistake to ban innovation, because you're literally driving quality of living and wealth out of your country over the long term. It's really hard to see that in the short term, but it's a clear trend in the long term. So they're basically saying we're going to lock ourselves into a secular bear trend. And even though they've been on the ascent for the last 30, 40 years or so, I think this is their peak, and I think they're going to start the descent now. I just saw a tweet yesterday from Mike Novogratz, who said the same thing, and I've been saying this for a while now. Mark my words, in 10, 20 years from now, we're going to look back and we're going to see about 2020, 2021 was where they peaked, and then they're going to start their decline, and they're not going to be number two 20 years from now, or most people thought they were going to overtake the U.S. I think they just sealed it that they're not going to maintain that trajectory.
And this is because the protectionist policies and trying to insulate and not being open to trade properly with everyone.
Protectionist, the centralized control always loses to a free market over the long run. It's because like I said, you're stifling innovation, you're stifling progress, you're stifling wealth, and you can't continue that. You can kind of keep up the charade for a while, but after a while, I can't. It's somebody from England, Margaret Thatcher, maybe, who said you eventually run out of other people's money to spend. And so these socialist systems, eventually that's what happens. You can only stifle innovation for so long before it starts to show up in decreased quality of living.
That's interesting. And then, but I suppose that their economy is so large, But I suppose they are already very big, so they can only get exponentially bigger by being open to trade and etc. Is what we're saying. Yeah,
That's what I think. Yeah.
that's really interesting.
So yeah.
Yeah.
A group of people, no matter how smart they are, they're never going to be as good as a wide open free market. So they'll eventually lose, unfortunately. And I feel terrible. I want all of the Chinese people to prosper and to do really well. Yeah. So it really pains me to see stuff like this. But I think the government, the CCP, is making a huge mistake, and we're gonna see the consequences decades from now.
And it seems to be increasingly so. They're getting more extreme rather than going the other way.
Right. Exactly.
What do you think the Chinese people are going to find some way to buy Bitcoin? Will people find a way when the government tries to tell them they can't? They will eventually find some way to do it. Or
there's always two types of people, right? There's the people who want to be told what to do, and there's the people who don't want to be told what to do. And so a lot of the people will just fall in line, and they're going to trust their government, and that's just how some people are. And then there's the other people they're going to say, like, wait a second, why would I do this? Like, who are you to say I can't do this? Kind of the American spirit. And so, I think that it's going to create a huge black market in China, and something like we haven't seen yet is under the scenes. There's still going to be a large, robust Bitcoin market, but it's going to be kind of under the purview of the CCP, I think.
Because I know for a fact, and this probably contributed to them pulling this forward, that there were companies in Malaysia paying for work, honest work to be done by, and vice versa, by a company in China, because I think there's some restrictions on what they can do in that way, and how they can actually, the Chinese to take money or put money outside of the country. So this is a way for them to actually work with other people without the government intervening. So they're obviously trying to crack down on that as well.
Mm-hmm. Interesting times. It's hard to watch. Especially, and Hong Kong is another issue that's going to come to the forefront more and more too. So it's tough to watch, but it is what it is.
And last thing on Bitcoin, the GBTC unlock, which has been talked about. What are your views on that? Is it going to affect the price? We saw, did it happen that, as well as this Wycliffe pattern, I think that happened, a big unlock around the same time before the correction as well. It may have contributed to the timing of the institutions doing this. But
right. So I think it's more of, how do I say this? I don't think it has to affect the price negatively, but I think that some large institutional investors want it to. And so I think they create a narrative, I would say a false narrative, that it should. I think they want to drive the price down. So the private investors who bought into the GBTC, private fund 6 months ago, they bought it at a premium and at probably a little bit higher price. So they're underwater on the price and they're underwater on the premium. So it actually behooves them intelligently to not sell. They're going to hold on to it unless they want to just sell and take the loss. If anything, what this is going to do is what they've probably been doing is shorting Bitcoin on the open market in order to protect against these losses. It's actually possibly going to drive the price of Bitcoin up on the spot market because they're going to have to cover their shorts. And possibly start buying to make up for their losses. But it doesn't, there was a false thing going around on Twitter for a while, and I've been trying to tweet to dispel that myth. People have been saying that it's going to just flood the market with Bitcoin, and that's just not true. There's no Bitcoin being released into the market because of this. There's not like a wall of unclaimed Bitcoin that the market's going to have to absorb. So basically, no, I don't think it has to drive the price down. And if anything, it might actually be kind of a contraindicator, and it might actually drive the price up in Bitcoin. So, and all that's happening is the people that invested at that time have the opportunity to sell if they want to. Yeah. And if they do, and why would they, right? If Bitcoin's been down, if they're smart and if they're huge institutions that understand Bitcoin and got into it, they're going to be smart enough to know we're in a pullback right now. This is a terrible time to sell. They tend to have a longer term perspective. They're going to wait until the price goes up before they sell. So that's how I look at it. And the one other thing, by the way, that possibly could affect the Bitcoin spot price is that when larger institutions today, so putting those other investors aside, if I'm a hedge fund manager and I have $10 million or $100 million to put into Bitcoin, And I see that the Grayscale Bitcoin Trust is trading right now on the open market at a 12% discount to NAV, or I could buy just straight up Bitcoin. I'm probably going to buy the Grayscale Bitcoin Trust, GBTC, because it's trading at a discount to NAV, and that's an arbitrage opportunity. Yep. It's very easy to buy and sell, and you have that arbitrage that if that goes back to zero at some point, you made an extra 12% on the price of Bitcoin. So I think most people are going to choose GBTC over Bitcoin on the spot market at current valuations.
And they can, is that in terms of buying GBTC, there's no limit on that, is there? You can buy whenever you want. Yeah.
Sure. Yep. Like any fund.
Interesting. Cool. I just want to move on to briefly touch on sort of your equity investment strategy. We talked about a few things last time, like your film's approach to equities and stuff. I just wanted to find out how you actually discover exceptional companies like that you might include in your fund, or ones that you put in your watch list that might be maybe have done their innovation already, but they're still strong companies. Or how do you do this? How do you find these companies?
Yeah, so I read all the time. I'm just constantly scouring the landscape for what. Well, first of all, I'm always reading, but what I love to do is I'm a macro guy who looks at secular trends. So kind of the same secular trends we talked about earlier, from electric vehicles to AI to software as a service to those kind of things, biotech. I think that this is where it's going. So it's pretty easy to hitch your wagon to any one of these trends and do really well over the long term if you have a longer term perspective and if you're okay with volatility. So then within those long trends, I look for what companies are the lead dogs, who's just killing it, what just IPO'd or SPAC'd and is looking pretty good, or what fintech company just continues to knock it out of the park with revenues that are 40 to 50% year over year kind of gains. Those are the kind of companies that interest me. And then what I do is I just look at these companies. I look at who's running it. I look at what their vision for the future is. I say, do I believe it? I do my films approach to it. I love it when founders are leading it and they're innovative and they're long-term value creators and they're master capital allocators and they're stakeholder friendly. And if I can find companies that are doing that within my secular trends, then I'll definitely consider buying some. And I usually start my stakes small, like 0.5% or 1%, and then build them up over time as my confidence rises.
And how important is revenue growth, do you think, as a metric? Is it really?
I think very important. I used to be, I came from the value investing background, used to be big into earnings, and then I got big into cash flows. I think earnings can be manipulated, so I hardly look at those anymore, relatively speaking. Cash flows are great, but again, in a world of easy credit and zero interest rates, if you can borrow and grow revenues really, really fast, and it's for a good reason because you have a great product or service that I think is just going to expand, and just market penetration is going to drastically expand in the coming years. To me, that kind of trumps everything else when I'm looking at different companies. So revenue growth is extremely important. Sustainable revenue growth, I should say.
How do you know if it's sustainable or not?
Again, based on how, if it's within a secular bull market, within a larger trend, and it just basically, it's all of this is speculation, right? All of it is subjective. Do I believe that it's going to do what it says it's going to do, or even do better than that?
Yeah.
Like take a Tesla. Everybody has feelings very strong about Elon Musk. He says, okay, next year we're going to sell 500,000 vehicles. That I'm just pulling this number out of my head. So do I believe that kind of number, or do I think he's actually going to exceed it? And what are the implications of that? He talks about full self-driving capabilities powered on AI. Do I believe that? Do I believe that this whole network of cars is going to be able to drive itself, and people are going to be able to lease their Teslas for income, those kind of things that he's talking about? If it seems believable and maybe he's even being conservative, then I would for sure take a bet on that, because it's probably going to outperform the market. But if he's a liar and it doesn't happen and everything he says is hogwash and Teslas start on fire every day, then it's probably going to underperform. So those are the kind of things you do, especially as a growth investor, is you have to see what is the total addressable market. Do I think it's going to reach that? How quickly? And is there another competitor who can come in, swoop in, and take their spot or not? And if they have what I think looks like a sustainable advantage and a great leader, I'll stick with them for the long term until I get proven wrong.
And is there a level of revenue that would be, you'd start to get interested in something and you wouldn't be interested in below? Like, are you going to look at companies that might have strong revenue growth, but they're still in the sort of 5-6 million revenue annually? Is that still interesting, or do you wait? Obviously, because the more revenues feasibly, it's just a little bit less risky. Is there like a sort of point where you?
Yeah, I tend to steer away from the micro caps. Those are a little bit too small for me. Yeah. Just because there's too many variables that we don't know and too many things that could still go wrong. So I tend to like companies once they start to get into kind of the mid cap range. Once they're kind of around like a 5 to 10 billion level, then in market cap, and then that's when it starts to interest me a lot more. So if those kind of companies have very strong, sustainable revenue growth, those are the ones, and they can still, you can see, tremendous gains. They can go, 2 to 5x over a 5-year period. So I get pretty interested in those companies.
Mm-hmm. Do you segment your portfolio into different sort of risk areas? Like some might be sort of 10x sort of growth, and then you might have some that's more reliable, safer, but still growing. Do you segment like this?
So I actually don't. I used to, but then I realized that when I do that, all I am doing is basically being like another standard mutual fund or index fund, kind of that, where you're just sort of diffusing the risk through diversification, and your returns tend to then just be about the same as the market. And so what I do, and I know it's just kind of how I'm wired, and thankfully I have investors who believe in my process and what I do enough, is I think if I see something, whatever it is, whether it's a Bitcoin or a company or some asset class that I think is going to shoot the lights out and beat the market in whatever time frame, and I don't even hold myself to that, because some people will use like a 3-year time frame or a 5-year time frame. If I have something I think is going to crush it in the next 3 months, I'll bet on it and I'll invest in it. Or likewise, I'll short it if I think it's going to get crushed in the next 3 months. So again, like of all things, volatility. I think we're due for a huge volatility spike. So I'm going to go big into volatility, going long volatility within my hedge fund. I don't know how big it kind of since it's a hedge technique, it'll offset the other positions that I have, but it'll get pretty big. If I'm really convinced that Bitcoin is here to stay and it's not going to go to zero, like Peter Schiff says, and it's not going to go below 10,000, like other big traders say, and that the network valuation is growing exponentially, then I'll go very big into it. And so I don't really set those kind of limits on myself. That really makes some investors uncomfortable, but people who know me and trust me, it tends to work out pretty well. So it just real quick, coming full circle, I think I said at the very beginning, I talked about this. I'm spending a lot of my time when market drawdowns happen, like this Bitcoin pullback of 50%. I spend a lot of time in my newsletters and memos counseling my clients to not be concerned about volatility, because volatility is the price you pay for significant outperformance in the long run. And volatility only equals risk in academia. And so, we talk about that a lot, that just because our portfolios are volatile, we have to focus on the long-term picture. And if you want to see huge outperformance, if you want to have the Amazon or the Netflix, you have to deal with these huge volatile swings in the near term in order to have these just life-changing gains in the long run.
Yeah. And finally, the final thing was about portfolio allocation, because I know you do short-term sort of trades in the hedge fund as well. How do you allocate, in terms of risk, how are you allocating? Is there a sort of way you allocate risk to that? Is it a percentage of account size? Is it, what's...
Yeah, I usually think of it in terms of just percentage based, like what percentage of the portfolio am I willing to put into this? I used to, again, base that on volatility as well. But I kind of let that go. Bitcoin, and I hate to keep bringing it back to Bitcoin, but Bitcoin really changed everything for me because it's really volatile. But I also think it's the safest investment you can make the price is unknowable, but everything else about Bitcoin is knowable. It's totally pre-programmed. It's totally secure. It's decentralized, all this other stuff. So because of that, I broke all of my rules, and I have a very large position in Bitcoin and Bitcoin related investments within my fund. So 3 years ago, I would have answered that question completely different, that I have volatility based position sizes, but I don't do that anymore. If I really believe in the long-term story of something, I'll go big in it, even if it means we're going to have a lot of volatility within our portfolio.
Yep. And even on the defensive sort of positions you take, like the VIX, and then you might short something. Is there a maximum exposure you'll have on like numerous short-term positions?
It depends. It depends what it is. Yeah. So individual stocks, if I'm say shorting a stock, I might go up as high as 5% in my portfolio. If I'm shorting like a sector ETF or something, I may go as high as 10%. That's usually about as high as I would go in a short. Shorts are scarier, obviously, because if they go against you, they increase in value and they become a larger portion of your portfolio. So longs, I tend to go about twice as long. I'll go up on an individual position if I'm excited about it and really believe in it. I'll go 10, 20%. Depending on what it is. So it just depends on what it is and what the market indicators are telling me. Yeah.
Awesome. Well, thanks, Jeff. That's been really interesting to chat again. Really good to get your insights and dig into the markets at the moment. Really interesting time to discuss them.
Thanks for having me. I always love talking to you. These are great conversations.
And just to remind me where people can go to follow you as the main place, Twitter.
Sure. So Twitter, my handle on Twitter it's Vailshire Cap, VAILSHIRECAP. That's on Twitter, and I'm really active on Twitter. I'm also on Clubhouse a little bit more. I like to run Twitter Spaces where we talk usually about Bitcoin and then macroeconomics. And then just my website is vailshire.com, and you can find me from there.
Awesome. Well, thanks very much, Jeff. Have a good rest of the week.
Yeah, thanks for having me. Have a great weekend. Bye-bye.
Thanks for listening, everyone. Just a quick note before we sign off. If you're looking for an easily digestible daily update on the markets, this might be of interest. Opto Updates is our short newsletter sent every day during the trading week, giving you a bulleted list of the top 7 stories from the global stock markets. We've done the hard work for you, highlighting relevant opportunities and trends, and in addition, we'll also keep you notified of any new products, stock reports, or webinars from the Opto world. If you're interested, sign up using the link in the show notes. And thanks also to Co-Fruition for consulting on and producing the show. Until next time.